Hello, my friends. Brett Pattison here with IGGA Global Advisors, coming at you from the financial capital of the West, that is Salt Lake City, Utah. Thanks for taking a few minutes of your day as we answer a question that I've been getting a lot lately. Talking with a lot of friends, a lot of family, a lot of clients, and I get the question a lot, that is, what do I think the market is going to do? We've essentially gone sideways, done nothing for 2 years. What's my forecast of the market? And I'll be honest, I really don't like that question, because ultimately no one knows what the market is going to do. All we do here at IGGA Global is look at what has history shown us. Have we been in this situation before? What happened? What's the probabilities look like? That's what we use to help determine what the market may do. That's not a guarantee, but it's important to understand that history as we move forward. And a little bit about that history. Since the early 1900s, as far as certain months go, August has averaged about a 0.01 down percent return. So we're not, typically August, very quiet month, summer's ending, final vacations, light volume, not a whole lot happening. September is usually when people come back from the summer, they adjust portfolios. There's usually a little more volatility. Market's average is down 0.5%. Then October typically is a strong month of up 0.7%. That said, nothing is guaranteed, but it's important to understand and have proper expectations moving forward. And always remember, volatility is the price you pay for returns, right? Volatility is not a bad thing. Volatility can be up or down. It is a good thing, and it is the price you pay for returns. So looking at that history, we can understand what may happen in August, September, October. But on a larger time frame, let's take a look at where we are. As I mentioned, for 2 years, we've gone pretty much nowhere. In fact, we've had 414 days of hitting a high back in June, July of 15, and then hitting it again just recently. The market's done nothing. Now, the last really since Brexit, the market has finally broken through those levels and is creating a new high. But here's the question. What happens after we see a long duration, a long time between highs of the market, right? This high was 414 days. What has historically the market shown? And so that's what this next study will show you, and we'll answer the question, well, is history on our side or is it not? And here's the data, right? There's 9 periods here, and starting in the 30s, right? From 30 to 35, up in the upper left-hand corner, there were 825 days between highs on the S&P. You can see the 40s, the 50s, the 60s, 70s, on down the line. You have your start date, you have your end date, you have the number of days, your duration. Right now, we're at 414 before this recent breakout that we've had. And so what is the average return of the S&P 500 in the following 12 months, 18 months, and 24 months? That's the question that we ask. And here's the returns. Boom. Just like that. And so let's take a look at these for a second. We look at the average. We have an average of 541 days, 12 months following 24.1%, 18 months following 31.9%, 24 months following 39%. That's the averages. So is it on our side? The data would suggest it is. Certainly that's not a guarantee, but it's interesting to note as to what has happened in the past and what may happen in the future. Now, it's always important as well when you look at this kind of data to always understand risk, right? Risk is so critical to any portfolio. And so as we talk about risk, the last thing I'll end on is if I were to ask you the question, if the market were to drop 20% in the next 6 months, how much would your portfolio drop? If you can't answer that question, we've got something for you. It's our free portfolio risk analysis. where we will determine and provide more clarity on your portfolio probably than you ever have had before. We'll look at your current reward to risk ratio of your portfolio. We'll answer the question, will you have enough to retire based upon the current reward and risk of your portfolio? And then if another 2008 occurs, if the market is down 20% or 30% or 50%, how much would your portfolio lose? Right? We can help you with a little 30-minute webcast that we would be more than happy to do with you one-on-one. You can go to that website there at the bottom of your screen, fill out some information, and we'll get right with you. As always, if you have any questions, feel free to email me at brett@igga.com. There's also my partner, Brian, if you'd like to reach out to him as well. Relax, my friends. We can take it from here.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.